Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It's Monday morning, April 12th, 2021. Last week and pretty much April have been pretty good to trade. We put March in the rearview mirror. We've been getting some good opportunities. There's been some good day trading opportunities, some good swing trading opportunities. What we're facing today, though, is we're facing a little bit of not so much too far, too fast, but the optimal entry is a little bit too far away from where we are now. Quite a few stocks. Again, I'm going to keep bringing this up every video because it's critically important to understanding how to be successful as both a day trader and a swing trader, but probably easier to understand from a swing trading perspective is that if you buy a stock here, let's just say that's the optimal entry, and up here is the acceptable the acceptable profit target for that trade. The more that gets taken up over 1 day to 2 day to 3 days, then accepting risk on that trade doesn't make sense because then you're basically kind of taking a 1-to-1 for a swing trade. You can, however, day trade those stocks. So that's really what we're looking at right now. Just to really bring that home is a lot of these stocks, and we're going to specifically talk about technology stocks today, are a little extended, not so much that they can't keep going, a little extended for starting a new swing trade. So what we're really looking for in a lot of these stocks that took off last week, Apple right at the top of that list, is we're waiting for them to pause. We're waiting for the risk reward to reset itself and give us an opportunity. Now, if you're finding, I just want to run this by you just really quickly, and this is a common problem that a lot of stock traders have where as they constantly feel like they're in good ideas, but as soon as they put the trade on, it moves against them. And it kind of shakes them out a little bit, dances around, and then after you get out of it, it does exactly what you thought it was going to do. That's what I'm talking about. So if you can imagine this, just give your stock a really quick look before you decide to buy it and ask yourself, how far is it extended over the last 3 to 5 days from what might have been the optimal entry? And the further away from that is, just step back, maybe look for a different opportunity. Maybe you can day trade that if that happens to be what you do. Day trading strategies are excellent in the stocks that you like to swing trade. So we're going to face that a little bit today. Stock futures are down a little bit, but I think that's a little deceiving because of how strong the market actually closed on Friday. And I'm going to show you that. We seem to be having the classic market phrase where the professionals control the close. And we actually rallied hard into the close, especially in the futures and the SPY ETF. I'll show you that. So we're going to take a quick look at the futures. We're going to take a quick look at some of the strongest ETFs last week, which represent those sectors. And then we're going to break it down a little bit into some individual stocks. We're going to talk about tech stocks and where they are closer to the optimal entry. We're going to talk about energy stocks, which are on the opposite side of that spectrum where there's been some short selling opportunities. We also have a couple of ideas that broke support or not necessarily in bullish order flow, but had monster volume spikes, which are the start of something known as accumulation. So let's head on over to the charts and we'll take a look, okay? All right, so starting out, this is what I meant here. If we could just zoom this out a little bit. Here's Friday's price action. And you can see it was pretty vicious in the last hour. So we're actually trading lower right now in the June E-mini S&P futures contract. You can see we're down 8, which right off the bat, that's in a couple of areas, it's not really the worst thing in the world. The market needed to relieve the pressure a little bit. We had that monster move on Friday, so it's making it look like it's down a lot, but it's really not because of how it closed. I think the move on Friday was a little exaggerated into the close. It was great if you were long. It was great if you were a buyer. But we are set right now about 3 hours prior to the market opening to open lower. So just wanted to give some context. Again, if we go over the market, you can see here, we actually had some lines drawn in the afternoon. We could remove that one there. This is how we work the charts at the end of the day. And you can see basically from 11 o'clock in the morning, the market was along the entire day. It was just a question of being patient during those times of days. If you happen to be day trading, where it kind of floated sideways and you got paid in a monster way at the end of the day. So the market is still strong. But again, if we take a look and see the little bit of a bigger picture, now we have in the SPY 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 consecutive days of closing above the open price. That is a really long time for the market and specifically for the SPY not to take a break. Now, it's not off to the races, but but it hasn't come up for air yet. And I'm expecting a little bit of profit taking in the market today. Doesn't necessarily mean we're going to have a big, heavy down day of selling. It just means, again, remember that image. How far away from you are you from the optimal entry? Now, you can make a case here that the SPY actually paused for 2 days and broke out again. And that's absolutely true. You just have to ask yourself, what is the normal move for the SPY? How far does it normally go without pausing? And we're kind of past that a little bit. I'd be shocked if we don't kind of drift a little bit here, but that doesn't mean that we don't have good opportunities from a stock trading perspective. Remember, and I'm actually just going to come back on the screen here for one quick second. There's always that top-down analysis pyramid you have to have in your head. Is the market obvious? And if it is, great, right? Then you have above that, you have the individual sectors, and then you start to break down where there might be pockets of opportunity. You know, Jim Cramer from CNBC, there's always a bull market somewhere. Essentially, he's saying that there's always a place where we could find buying happening, bullish order flow happening, deep pockets making commitment, right? So you have the market, and if the market's not obvious, then you could go up to the sectors, and we're going to talk, again, we talk about technology and energy sectors today. Then above that, you have individual industry groups within that sector. And then above that, you have the individual stock. So you're always trading the stock no matter what. You can have a stock that really is lighting it up in a big way and still make trades that have absolute conviction. But it's just a lot easier when other money is flowing into the sector and multiple stocks in the same sector are doing the same thing. And we saw that in energy on the bullish side from pretty much November to, let's say, end of February, early March, and then that kind of just fizzled out. They lost all their mojo. Smart money started going into technology, and that sector has been pretty strong since then. So it's kind of fun to watch the rotation. So the market, sectors, industry groups, and your stock. The more of that you have on the same page, that's where your conviction level goes higher. Remember that. Every trade is not the same conviction level. You have to adjust your position sizing based on your conviction level in the trade. And those 4 steps, you might want to pause that and go back a little bit and just really understand how to build your argument for a great trade based on those 4 steps. Again, I'll just say it really quick: market, sector, industry group, and stock. You'll be surprised at how much your trading changes when you break it down and you say, how much of this argument is on my side before I accept risk on a trade? Is it 1? Is it all 4? And that completely changes. You might risk 3%, which is pretty aggressive, of how much money you have allocated towards a position because you have all 4 on the same side. You might drop it all the way down to 1% or maybe even less if just that one stock is really strong. An example is FUBO on Friday last week, where there was news on the stock, but it was really bearish order flow in the bigger picture. So you didn't have order flow on your side. You just had that one-day catalyst, and it had a really good solid trend day, as we called out on Friday. We said it could have been a day trading opportunity, but not quite a swing trade until it gets over that 25 level and shows us a little confirmation. So I'm going to show you what that looks like really quickly, just so you have a mental model. I think that when I teach trading, it's just easier when you see it. You'd be like, okay, I understand that. And you snapshot the chart and you understand conviction level, which helps really, quite honestly, it helps you trade in a much more relaxed atmosphere, simply because you're trading the right position size for the quality of the idea. All right. Oh, by the way, if you find these videos helpful, definitely click down and give us a thumbs up. I really appreciate it. If you have any questions, definitely leave them below. I get back to everybody as soon as I can. And what would mean a lot to me is if you could just click down and subscribe, and make sure you click the bell down there too so you get updates. So let's turn over to the charts. I'm actually going to show you that trade in FUBO from Friday. And you can see here clearly we had bearish order flow for a while, but news came out, and this candlestick here doesn't really do it justice. I'm actually going to zoom out again for those of you that are day trading. This was the opportunity on Friday. And if you remember Friday morning, we said over 25. It got up to 25 and just stopped. And you can see that it came down. So we did not initiate a trade. But here's really what I'm talking about. The catalyst was pretty strong. The news had legs, so to speak. We had an opening range breakout trade, and we followed through for the better part of pretty much $3 on that day trade. So lower conviction level because it was just a one-day argument, for lack of a better way of putting it, and you got some follow through. So you might want to snapshot that chart, both this 5-minute chart here and the daily chart, and the reason why, and put that into your own personal playbook, I guess, however you want to word it. I know Mike Bellafiore has a book called Playbook. That's a good example there. 1 day's worth of conviction. You could absolutely day trade it. So what we're going to do now Obviously, we've been talking about technology stocks, right? Technology stocks have now gotten in the Qs all the way back up to the previous highs where the SPY was actually through that level for a while. So it's good. Now we're probably going to pause a little bit up here. We're still looking for longs. I want to make that clear. But this is interesting here is retail actually exploded last week. We had some stocks that are still setting up at buy areas, Target, Kohl's, Dollar General. Okay, we got a really good push on quite a few of these stocks last week. And you can see actually here, Dollar Tree actually reversed into what we call not only a bullish U-turn, but it's also a bullish engulfing candle and a really good reversal last week. But we're going to get into a group of stocks, specifically Baba. We're going to start out today. And you can see, again, same story that the stock does not have bullish order flow. However, really good news. So this could be a very similar trade to what we had in FUBO. That's kind of why I set it up that way. Where let me just show you what the news is here. I'll post this link below the video. They were actually fined by the government $2.8 billion. And what this really means is that it's kind of like out of the way now. And I know $2.8 billion is just a ridiculously big number. However, because the news is out of the way, because the uncertainty is out of the way, which, by the way, that's a big thing to write down. The market hates uncertainty. You get that uncertainty out of the way, and now you see the stock is actually up $13 and change and over $6. So we might end up getting the same type of trade in Baba today as a day trade, but it's not quite a swing trade yet. A couple of other stocks that I want to talk about right out of the gate is Dash, and I'm going to pull this in a little bit here just so you have a little bit better perspective. You can see a monster spike in volume here in March 9th. And right after it pushed to new lows, ironically, right? So that's where the smart money stepped in. That's something to pay attention to. So you need to have that 130 level in your mind. Well, Friday, again, same exact thing happened. So we're looking for Dash to actually show from this accumulation to reverse. Same thing in JKS today. JKS actually a little bit longer term moved to the downside. We actually did break support here and follow through. What's ironic here is that early short sellers buy these breakdowns in bullish markets, and those are usually shoved right back in your face. And look at the volume spike here that we saw in JKS. Again, one day, you have 1 day, 2 day, stage 1, stage 2, and stage 3 order flow. This is stage 1 where it's just that singular day. We might see the solar stocks wake up today. So again, remember what I said, market, sector, industry groups. You might see the solar stocks. This could be a foreshadowing of solar stock. I can't even say it. Solar stocks reversing today. If they do, we're going to be watching them now because obviously they're in our list. So down a little bit now pre-market with the rest of the market. So we'll see actually what happens. GRWG is setting up one of my favorite plays. We've mentioned it keeps consolidating. That consolidation leads to an expansion in volatility. We have not broken out of this window yet. However, if we do, that 55 level is the level that I'm going to be watching today. Another stock that got beat up pretty big over the last few months, and you can see here both from earnings and the Slack deal that they had a couple of months ago. CRM Salesforce.com stock actually has traded really strong for the last 2 weeks. It still needs to get above 240. But again, remember, if you want to be a good, consistent trader, you need to set a watch list of stocks and price levels. So now we have the alert set for 240. So we can still day trade it up to 240. But remember this window. The window has shrank here based on where it's gone for the last 2 weeks. So I'm looking to day trade it up to 240, looking for a pause, and then looking for a move through that level. Next, we have Pulte Homes. We're starting to really get into a little bit of a different window now. Pulte Homes and BBY, BBY actually, this is the first day that BBY got above this level, which is basically the 122.50 level in that area. So let's just say 122. So we're really not doing anything today unless it gets above and trades above Friday's high. If it does, we're going to initiate a new swing trade with just below 120 area. So we're probably going to end up risking about $2.50 on that trade. Lowe's and Home Depot, these definitely fit the criteria that the stocks need to cool off just a little bit. You can see the vertical move here. And if we just do the expansion from where Lowe's came off the lows, we're looking at roughly a 32% move in 24 days. Amazing, right? Home Depot, basically the same exact thing. I still like both of them, but because of how far that they've traveled over the last 4 to 5 weeks, I'm lowering my position size because of how far they have already extended. And even if you just take it from this breakout level here. It's still awesome. I'm going from 3% down to 1% on this particular idea because I think it's a little extended. Even a 50% retracement from 248 to 320, that's a pretty big move. That's probably down in this area right around here. And that's a conservative pullback. Apple, again, very similar to what we're talking about. We actually called this, I believe, on Wednesday. Hopefully you took advantage of a couple of days here on the long side. Now, the 138 level is the level that we talked about for a while. So we have roughly $5, give or take a little bit, to the next level. So it might be a 1 or 2 day trade, but that 138 level has been a brick wall. Square and PayPal, very similar. Really big expansion and volatility over the last couple of weeks. You can see 280 here for PayPal and Square. Square, same thing. Very similar. PayPal and Square. PayPal, we actually said, was a 275 target. So we actually have a little bit more left on there, roughly $10. We talked about that last week. So what we want to do now is I'm going to go directly into the charts. I'm going to take a look at some tech stocks that you can consider for this week. VUZI is one that's been pretty strong. Now, again, you can see all the wicks on the charts. It can be a little frustrating as a day trade, but for a swing trade, we need to stay above 30. SONO is a stock that we mentioned last week that actually is now sitting right at this breakout level. So again, you need to have your alerts set. It's kind of like a triple top right now. We need for it to see it to punch through this level. Intel came storming back in a big way. Now, again, as we mentioned in Starbucks last week, not really the greatest breakout stock to trade. We want to see it pause above this level and then take off, kind of like we saw here, but now it's 4 days later. And we obviously have to mention Microsoft today as well. Microsoft has been on fire. For me, this is still a day trade right now. I'm not looking to initiate a new swing trade because we are basically almost $8 or $9 away from what we might consider that optimal entry. Now, again, we talked about energy stocks on the other side of the tape. I'm going to just go through a couple of them. CPE is kind of in that same kind of consolidation that GRWG is, but it was down 13% last week. PXD rolling over as well. And FANG fits that criteria as well, where it clearly doesn't have that same bullish mojo to the upside. So we're looking to be long technology stocks more as a day trade. We have a couple of accumulation stocks. We have a news story stock. There's a lot to go over today. So you're going to have opportunity. It's just a question of whether or not the market's on our side. If not, remember that scale, the market, the sector, the industry group, and the stock. You can still have some pretty good ideas just trading the stock here today as well. So there's a lot of swing trading opportunities as well as day trading opportunities. If you want to get my swing trades and get my course, just click on the link below the video. I'd love to see you on the other side. Have a great day, everybody. Thanks so much for joining me today. I really appreciate it.